Yeah, now we are live on Facebook. I had just seen a place I needed to turn on to allow for going live on Facebook. Perfect. So,
Yeah,
so ladies and gentlemen, welcome to Financial Wellness Center Facebook Live broadcast tonight. We are so excited to have the opportunity to celebrate another month, to see another month, despite having the coronavirus pandemic that has led to a lot of things changing. However, we are so excited to see you and thank you so much for joining us tonight as we get to discuss on how you can set sustainable investment plan. And as we shared during the day, that tonight we shall be having a very amazing guest with us. His name is Samuel. He is a software and simulation expert and an innovator. Few months ago, he had invented a certain tool that was going to curb the current COVID-19 pandemic. And today we are so excited to have him on our platform as he gets to pour his knowledge and share with us on how you can set sustainable investment plan and of course take advantage of the current investment opportunities that are available despite having the pandemic. So I'll just give us like 3 minutes so that people can get to join in before we can officially start off the live broadcast and definitely allow our guest to introduce himself. So tag your friend if you have a friend that has been asking you about investing, if you have any person that you feel they need to know more about investing, this is the place they need to be. They need to join us tonight as we shall be delving deeper on how you can take advantage of the current investment opportunities that are available to you. Um, Meanwhile, as we wait for more people to join us, I request you to follow us on Instagram at Financial Wellness Center, and of course, get to um, get to check our YouTube channel, Financial Wellness. We shall be updating the link on above this live session so that you can go to our YouTube channel and hit the subscribe button and turn on notification. Uh, So for those of you who are joining in, thank you so much. I just encourage you to send us a hi and say where you are watching us from so that we can get to know so that you are able to see us from. Samuel, I hope you can hear us because I can see it's like this broadcast is on and off. I'm not sure.
Yes, I can hear you.
Oh, perfect. So for the interest of time, I think we can start off right away. And Mr. Samuel, you could take this opportunity to introduce yourself to our audience so that we can get to dive right away into tonight's topic.
Thank you, Sheila, for that wonderful introduction. It was quite a mouthful. Okay, maybe let me just explain to viewers what basically I do. What I do is that we try to solve problems using software, code, and computers, and maths. So one of the biggest headache right now, everyone's mind is about investing. How do you invest in a volatile time like now, where there is COVID and where everybody is scared stiff, everybody is preaching Armageddon, and how do you make sense of all this? But I would like to tell our viewers that in times of crisis, opportunities are created. A time like this, shares fall, the market go haywire, they fall hard, and many people cannot make head or tail. So they get scared and they dump stocks, and they fear. So as Warren Buffett said, when people are fearful, you should be greedy. When people are greedy, you should be fearful. So how do you make sense of such a thing, and how do you create a plan so that you can thrive amidst the chaos? What is important is first to understand the problem at hand. And this pandemic, sorry, there was for that small interruption. This pandemic is very strange in that it's hitting the countries of the globe in a very big way. So for you to be able to come into the crisis and exit from the crisis unscathed, you need to understand the whatever is at play. Then you make a plan on how you are going to attack the crisis and thrive, so that you can take advantage of the opportunity. One example I can give is if you see a leopard hunting, a leopard can hunt buffaloes, but it never attacks the buffalo herd. What the leopard does is that it tracks the buffaloes and goes for the calves. Then it gets a calf, kills it, and hangs it in the tree. So you see, in the chaos, the leopard emerges successful without getting hurt. So here, this is a chaos that is coming in here very strongly. So what you need to do is to understand the chaos, create a plan, execute your plan within this period, because the shares are now down. So you need to buy the shares when there's crisis so that you can get as much as possible. But even as you are investing, you need to be very careful so that you select the stocks that are the gems. You select the best stocks, even in a crisis. You don't buy everything that is on offer just because it's cheap. You need to buy the best thing that is on offer so that you can accumulate your portfolio and grow it during this crisis. When the crisis abates, as it will, because nothing in life is permanent, both good times and bad times don't last. All of them, they all end. When the crisis now abates and we cross the bridge on the other side of growth, you'll have gotten yourself some very good stocks that are going to help you now in growing your wealth and a portfolio, even increasing your income. So this crisis presents itself as a threat, but use it as an opportunity.
Mr. Samuel, just before we can, go deeper, it's very clear that this crisis, in as much as people are complaining, it's also an opportunity for a lot of people to, build on wealth. I believe the last time we had such a crisis was in 2008, and maybe you could share with us what's the difference between the global recession that was experienced in 2008 and right now in terms of investing. What are the current differences that we are having between the 2008 global recession and now, before we can go deeper?
The 2008 global financial crisis was a financial crisis. What happened is that the banks overstretched themselves by buying and lending mortgages that were not worth, and so those mortgages became toxic because the banks that hold the mortgage, they had lent more than the value of their underlying assets. So people realize that they're paying loans that are and their true assets are not worth. So people just stopped paying the loans, and the banks were left with what we call toxic loans, which people are not servicing. And because the banks had used leverage, there was a Wall Street uses something we call securitization machinery. So they take loans, they borrow them together, and they sell them as credit default obligation. So what happens is that the bank had no liquidity, and when banks have no liquidity, the global economy is credit driven. So banks are the one that finances the growth and consumption of almost everything. So banks were not able to finance the growth. And because of that, the economy just contracted and fell through. To rescue that crisis, what the global government did, especially the Fed, they pumped money into the banks saved the banks, and the banks were able to lend credit again. This crisis is very different. This is a health crisis. Like
Okay.
what is happening here is a disease that is coming in. People have never seen such kind of a disease. It kills a few of the people, but it infects a huge number of people. So to stop the spread of the disease, the government are instituting restriction of movement. They are banning flights. They are actually stopping the fuel that runs the global economy. So this crisis is different because we don't have a credit crisis. It's an economic crisis that has been occasioned by the response to control the pandemic. So this crisis can resolve itself very quickly if health and safety is adhered to and people follow simple basic hygiene measures. But because people don't like to follow laws, the crisis now continues. Like we can see in America, people are treating this crisis as a political crisis. In Kenya, I don't want to talk too much about it, but it's like a police or law enforcement crisis, which is not. Countries that are doing well, that have seen the crisis for what it is, a public health crisis, have come out unscathed. Countries like Taiwan no longer have local cases, and they didn't even have community transmission. New Zealand already stopped the pandemic. Australia, even with a high case count of over 7,000, already stopped the pandemic. So countries are going to move out of this crisis their own way. Countries which took measures quickly and were very strict in enforcement are going to be fine. Countries which are lax are going to pay a very heavy price because governments that have taken a lot of measures to control will not allow citizens from those countries that are heavily invested, like infected, like United States, Brazil, to visit their countries. So it's going to depress the global economy in a very big way. But it's going to affect some sectors and hit some sectors very hard, while actually causing a drive in other sectors. Technology sector is going to actually thrive. It was doing very well before went into the crisis, but it's going to do even better during the crisis and even after the crisis. Education sector is going to be hit hard because of closure of schools, but online education is going to be a big hit. When you look at
Just
things like
okay.
airline and hospitality industry,
Mm-hmm.
the airlines are going to be hit hard because few people have confidence to travel. Hospitality industry, few people want to go for holidays. So it's a mixture of things.
That is very correct. There will be a lot of effects, especially in various sectors. And before we can get into that deeply, maybe you could explain how has this the financial wellness of a common citizen been affected from a fintech perspective? Because
What has happened is that because of the way the crisis has hit, some industries were forced to close and some people are laid off. Private schools were closed. So the teachers in private school are not even getting any salary. The people who are in the hospitality industries have also had to be sent home. The economy is running in some sectors. It's running at half capacity or even a quarter capacity. So most people, like in the transport sector, the matatu industry, most of the drivers don't even have work. They are carrying less passengers, so their income is highly constrained. So a huge number of people, especially in the informal and Juakali sector, are very affected. The people who have not been affected by this crisis are people who are on government payroll, but they will get affected. The May's tax collection was down 30%. So you see, the government is now finding itself in a very precarious situation because it has to pay salaries from reduced taxes. So what will the government do? Either they open up the country or they slash the salaries of public servants. So everybody is going to be affected. Provision of services, goods have also gone down. So this sector, almost all the sectors have been affected, and people are actually seeing reduced income. However, people who are now in the mobile money and in the financial industry and internet are actually seeing more traffic. So they're actually gaining from this crisis. So it's like a loaded gun. Their businesses were slow to pick But now people who have taken advantage of digital economy, people are working from home, people are ordering things online. So the people who are in the digital economy are actually thriving, and they are seeing these sectors going forward. So if you have an eye for investment, what you do, you want to load on to the sectors that are doing well. Because in life, nothing works better than success. If something is working, it's more likely to work even better, given more investment. If something is failing, it usually fails even more. So you position yourself and you take the bandwagon that is working. So if you position yourself in the digital economy and in the digital workspace, you'll thrive more.
So that is very correct. To the people who want to really thrive in this season, it's important for them to take advantage of the digital economy and, of course, ensure that their businesses have migrated to various digital platforms and at least can offer any of the digital services that could be required in such a season. So maybe you could also tell us on how can individual and businesses take advantage of the current investment opportunities. As you mentioned earlier, there are a lot of investment opportunities that have showed up despite having the pandemic. So, how can individuals and businesses take advantage of such opportunities without really having to, to sacrifice so much? Because we have a lot of fear right now when it comes to investing.
So what happened is that in a crisis like this, people throw away the child and the bathwater. So you see, if you look at like the stock market, there are some shares that were doing very well, and some companies had invested in digital finance. I will give an example like KCB or Equity Bank. So these shares were beginning to recover before the coronavirus epidemic hit Kenya. So what happened is that people panicked and they dumped the stocks. So the shares now are selling for ridiculously low PEs and very high dividend yield. So what happened is that if you are in a crisis like now, you look at the shares that are likely to give you very high dividend yield and you buy them for pittance. So you see, you go to the stock market. Do not go to broadcast. Do not go buy shares by broadcasting, but checking specific counters that have very high value and are on sale. Not just in the stock market, even in real estate, because people are pressed for cash. Many people are facing cash flow issues. So you're likely to see a property or any other investment vehicle that's available now for sale because the owners want to liquidity and cash flow. So because of cash flow constraints, you can pick up jewels right now. So as a wise investor, you position
Mhm.
yourself. Do not try and go to invest in get rich quick schemes. They do not work. And pyramid scheme will almost always lose your money. So what happened is that you, with a keen eye, and here this is where you might need even financial advice from someone who understands these things very well. With a specific amount of money, you can create a plan and you follow this plan such that you say, I want to achieve something within this crisis. And because I don't know everything, I look for people who have insider information or insider in the industry. They are going to advise me on how to go about this so that I don't lose my money, because in a crisis like this, some companies are going to go bust. If you're not trained in understanding financials and metrics, you might buy a company that goes bust. So you need someone with a keen understanding of financial instruments and how shares are traded and the company's history and even their management to tell you, do not bet on this wrong horse, bet on this right horse. Once you do that, you can now be confident that you are making the right decision. Because at this point, you need to make the right decision and avoid making wrong decision. A wrong decision here can send you to the grave, because if you have invested a lot of money and a company goes bust, you can be in a lot of financial problems. So what you need to do is you have a plan and get proper advice and consult with people who understand the market. Do not don't go to invest in the stock market blindly. Invest with a plan. Be smart.
True. That is very correct. And as you mentioned, people need to get financial advice before they can jump into investing in any market, especially right now. And we are so happy to announce that Financial Wellness Center is here to help you get the financial advice you may need in order to be able to invest in the stock market, in real estate, in government papers, and of course any commercial paper. Um, you just mentioned something about a plan. You said we need to have a plan so that we can take advantage of this opportunity. So, how important is it to have an investment plan, especially in this season where everybody is trying to save? It's like we've gone into hiding. We are trying to save everything we can. So, what is the importance of having an investment plan from when you view it from a technical perspective? Why do I need to have an investment plan?
A plan is very important because a plan is like a guide. This is something that you follow to see whether whatever you wanted to achieve at the beginning, you're actually achieving it. It has key milestones. So, and a plan, let me give you an example of a house. If you want to build a house, you have to go to an architect so that he can conceptualize how your house will look like and what kind of steps are necessitated by the plan that the architect will give you. If you don't have a plan, you go and start building, you'll do a lot of crappy work. Sometimes we may even demolish walls because you realized here the room is small, or you do a lot of crap things and you incur a lot of losses. The same case with a plan. If you have a plan, you know at this point in time, I'm supposed to be doing ABC. Am I doing it? Because you see, a plan will cause you to have fidelity. So if you, because you can have, everyone has ideas on what they can do. Everyone has ambitions, but people who succeed are the people who put those things in writing and put resources to actualize those plans that they have. So you see, the resources here is a budget. You have to have a budget. I'm earning this amount of money. I am spending this amount of money on XYZ. And I'm going to spend this amount of money every single month for this period so that I can achieve XYZ. If you don't have that, you cannot say you're an investor because you are simply a speculator. A speculator is someone who is trying to take advantage of some market shortcoming to make a quick buck. You can, when you are a speculator, you can make money this month and lose all the money next month. And you are just gambling. You see, you are not really trying to achieve anything. You are trying to quick entry and exit. Then there's also another important thing that is required that the plan now comes into. Let's say you are investing and you are following a plan. 2 years down the road, your investment is beginning to pay off, but it has not reached the stage at which you wanted to cash out. Then someone or your friend gives you a brilliant idea on another new investment. And if you didn't have a plan, you can easily cash out your investment in shares to go to follow the wind. This other new idea looks like it can double your money or triple your money or such kind of nonsense, which normally is just a scam. If you had a plan, you would say, yes, you have come up with this idea, it's good, but I am doing this because this is what I set out to do 3 years ago, and I have no reason to change course. So you wait until I finish my plan and achieve this. Then after maybe 2 years, you can come back with your plan and you can tell me how we can now do your thing without investing with emotions. Investment is not an emotional thing. You have to
Correct.
invest
Yeah.
based on facts,
Mm,
figures, and projection. You have to make a projection of how the economy is going to evolve based on present conditions and what kind
yeah.
of actions are happening in the economy. So a
Mm.
plan, having no plan is like planning to fail, in short.
That is very true. We've always heard of that saying that failure to plan is planning to fail. And definitely, I understand just from what you've said, when you have a plan, you become so solid in your investment. will not be swayed by the hullabaloo that comes along, especially in such a season. Maybe we'll just read some of the comments from our viewers. Nderitu Muya, you're saying good stuff. Samuel tuned in. Thank you so much for tuning in. We have Chebet Jamenet, you're saying great lessons. Thank you so much for tuning in. Keep on inviting your friends, keep on tagging as many people as possible. Any person who wants to know more about investing, or you want to know how you can set a sustainable investment plan during this COVID-19 pandemic, this is the live session you need to attend to. Um, Back to our topic, Mr. Samuel. Maybe you could tell us what's the future of investing, bearing in mind there has been a lot of scams going around, and we've seen most companies being declared bankrupt. So, um, when we began, you said as an as a software expert, you focus on providing solutions. So, what is the future of investing? Depending on the formulas you used in your technical aspect, what is the future of investing? How can we predict that investing is the right thing, that it will be there in the next 10 years?
The future of investing is very bright because new companies are going to be formed. Companies that are here
Mhm.
now, some of them are going to thrive, but some companies are also going to die because technology changes. And as technology changes, it disrupts the market. So what happens is that you need to understand the current environment and see what kind of opportunities are there and what the companies that are there, how they are making strides and how they are preparing to take advantage of the emerging opportunity. So now some people usually take advantage of people who want to invest by coming up with scams. And the way to identify scams is very easy. Someone can promise you interest rate of 20 or 30% per annum, or they can even promise you double your money in a month or two. But I always advise people, if someone is trying to tell you that you can make so much money, why don't they go invest and then make money? Then they come and show you how they have invested and made money.
True.
Because
Mm-hmm.
investing is hard, it's not easy. Investment
Mm,
requires you to learn things. Investment requires you to take advantage of emerging opportunity. The only people who make money by trading quickly and speculatively are traders. Traders are the only people who make money that way. But if you look at the world at large, we don't have billionaire traders. We only have billionaire investors. Warren Buffett is a good example. If you look at all the guys who are listed at the Forbes, they do not invest by trading. They invest in solid companies over a long period of time. What they do is that they understand about the power of compound interest and time. So you see, you identify a company that is growing, and using the power of compound interest and time, you invest in it and you are patient. The other thing you need to do, you need to understand the company you are investing in. Because you see, a company is a company, it does business. So once you understand how the company generates its money and how it dominates the market, even when there's something like now, like coronavirus or pandemic, or there's market that is down, you will understand how your company is positioned. So you don't sell your shares depending on how whether the company is likely to weather the storm or not. So you make your entry and exit based on facts and figures and not emotions. So if you want to become wealthy, the stock market is the most likely way to become very wealthy. Don't be cheated by anyone else. Forming companies, investing in companies is the surest way of generating wealth in a capitalistic society like Kenya or anywhere in the world. Even China have very many listed companies now. So it has been proven that companies are the one that make and generate most of the wealth. So if you want to become wealthy, invest in a company. And if you are very, very smart, you can start your own company that gives a service and invite other investors to come in and pool money. But remember, you cannot grow rich overnight. It's usually a journey, and it's a long journey that you start and make. Every time you incrementally add and grow, and then wait for the power of compound interest to work for you. So always learn compound interest works very well for you. Make sure that it never works against you. When you take a loan, compound interest is working against you. When you're investing, compound interest is working for you.
That is very correct. That is very true. Most of the world's richest billionaires, they are never traders, and we've never seen a trader becoming a wealthy person. It's usually investing in the stock market and businesses, and maybe some also real estate. But on real estate, I believe you really need to be keen on the location and amenities, because not all real estate can make you wealthy. This can be proven by people who bought land in Timbuktu, places that have never grown for the last 20 years. So, real estate, you really need to be very careful and very keen on location, and definitely also on the amenities around that place and the potential of growth in that place. Maybe Samuel, you mentioned about compound interest. Maybe you could break it down to a simple man's language, because I know most people are like, now what is this compound interest? How does it work? Maybe you could just give us um, a brief explanation of compound interest. And as to our viewers, as Samuel is explaining to us, keep asking your questions. We are almost going to your section where we shall be taking up your question, and Mr. Samuel will be answering to you. Samuel, over to you.
Now, compound interest is where your money that you have earns interest, and the interest that comes in also earns interest. So let me give you an example. If you invested 100 shillings and give you interest, compound interest of 10%, at the end of the year, you'll have 110 shillings. The next year, the 10 shilling will also earn interest. So you'll have 121 shillings. So it grows exponentially. It's one of the best ways of growing exponentially. Now, if it's working against you, if you borrow 100 shillings and you don't pay the interest at the end of the year, your now outstanding loan will be 110 shillings. So in the next year, you owe 121 shillings. So it grows like that. The problem with compound interest, it can double very quickly. For instance, if you're using 10% within less than 7 years, your loan is now double what you borrowed. The same case if you had invested that money. If you are earning compound interest, if you do 10% per annum, within like 7 years, you have almost double the amount. So there's usually an exponential formula that you use. It's called e to the power x. So you convert that, and it's a bit complicated to just discuss on a Facebook page. But what the best example is this: if you invest 20,000 shillings every month over a period of 4 years, it's 4 million because of power of compound interest. There are some calculators on the internet where you can just key in the amount of money and the interest rates, and it gives you after a period of years how much money you have earned, or how much your loan could be worth. So when you're investing, be very careful. Make sure that compound interest works for you and not against you. So one of the things that we do is that avoid companies with heavy debt loads. So don't buy into a company that has a big debt load, because compound interest is working against that company. A company that's servicing debts, its shares are likely to go down because it has a poor balance sheet. A company that is low on debt and big on assets is likely to grow because it's earning interest from the assets, and it's likely to even give people dividend.
That is very correct. Companies that are, we always say you need to check the debt equity ratio of a company before you invest with them. because you might find a company is servicing more debt that is higher than even the profit they are getting. So, in such a case, if you invest in such a company, chances are high compound interest will not work for you. And this is one of the reasons why you hear most people saying compound interest is a scam. It is not a scam, but it's the company you chose that is working against you. Also, maybe you could touch base on fixed deposits. Just maybe a sentence or two.
So in a fixed deposit is that you take a loan or you give the money to the bank, then the bank gives you a fixed amount of interest over a given period. So now, okay, but banks are very smart. What they do is that when you go and take and give them money for a fixed deposit, they'll calculate at once. So they tell you you have a fixed deposit account for 6% for 1 year. So if you give them a million, they'll give you 60,000 at the end of the year, plus your 1 million back. But if you take a loan, they calculate your loan every month. So that fixed deposit, the interest that you are likely to get is simple interest. But if you take a loan, you pay compound interest. Because you see,
Mm.
banks are in business. So, and it's understandable that they'll give you the short end of the stick and hold the long end of the stick. So what
That
I
is,
advise my clients is that
mhm.
don't be a client for banks for loans. Be a client for banks to invest. And one of the best way of investing in a bank is being a shareholder of the bank. So compound interest that the bank is earning is working for you.
That is very, very correct. A lot of people think that um, they just know being customers of the bank, opening accounts, but we forget on owning part of the bank. If you look at the best CEOs of the biggest banks in the world, they usually own a certain percentage of that bank through shares. So that is one of the ways, as our viewer, you need to take advantage of compound interest to make it work for you. If you have an account with a certain bank, ensure you also own a piece of it through shares. Don't just be a customer every now and then. Our last question, Mr. Samuel, so that you can be able to answer the questions I'm seeing here on live. How can one cushion themselves from these unprecedented market dynamics when it comes to investing?
So one of the tried and tested methods of cushioning yourself when the market is unstable like now is to be diversified. Do not invest in one single company because crisis will come and some companies might not be able to withstand this crisis. If you have well, if you have well diversified, if you have well diversified, you will be able to weather the storm. So what happens is that never carry your eggs in one basket.
Yeah.
Have a well diversified portfolio. But that does not mean you broadcast your portfolio. Always invest in key stocks. They don't have to be a hard stock, but they can be a couple of stocks, such that if one company collapses, your entire investment is not jeopardized. So what the rule of the thumb is this: never invest one single large investment such that its collapse can jeopardize your livelihood. So
Sure.
always make sure that you are even if you are very sure about an investment, always take a worst case scenario that if this I've invested X amount of money in this company, if it goes bust, I will be able to pay school fees and I'll be able to feed my kids. Not that if it goes bust, now you are unable to meet your daily costs because you all your investment were in that one, whatever in what that one investment. So always be diversified, but be diversified in a smart manner. Do not broadcast. Don't go and buy almost all the stocks in the stock market saying that you are well diversified. That will never give you money because what happens is that in a market, many companies are not going to do well. Like they have not been doing well for 10 years, but some companies are going to do extremely well. So The art of diversification is key, but diversification with a good analysis and a keen eye on what is best for you.
Perfect. Actually, we always say diversification is the only free lunch when it comes to finance. So if you really want to enjoy anything when it comes to money management, you need to consider diversifying your portfolio, especially in the stock market. So we shall go right away to answer your questions. I can see a lot of you have given us your comments. And like Wayne Anyamba, you are saying excellent advice, bro. That is very true. That was amazing advice. We have Chebet, you are asking what is the lowest amount that someone can use to invest in stock markets? Maybe Samuel, you can answer that, bearing in mind with the Kenyan economy, because I believe every economy differs. And maybe towards the end, you can also tell us um, the outlook of investing in global or international companies.
So now, okay, the lowest amount of money you can invest in the stock market is actually, it depends on the value of the shares. The minimum shares you can buy through your stockbroker is 100 shares. So some shares are selling for even 2 shillings. So you can actually invest 200 shillings. Okay, most of the shares that I recommend to my clients usually range between 50 to 100 shillings. So with 5,000 shillings, you can actually invest in the stock market. So you have no reason not to invest. And if you're investing 5,000, that means you can save 200 shillings daily. At the end of the month, you have 6,000 and you can start investing. So investment doesn't matter. What matters is how you are following that plan. Investing over a long period, even if you're investing very small amount, grows up very quickly. So if you invest 200 shillings, it's like you are investing in Mshwari for 200 and saving, and then at the end of the month, you go and buy that with 6,000 with shares. You can beat someone who just invests once and just stops because you continue to invest almost on a regular basis and your investment pie grows exponentially. So yeah, you are making you are doing what we had said earlier. You are taking advantage of compound interest. So there's no reason why anyone should not invest in the stock market because, as I said, some shares cost 200 shillings, two shillings. You can buy shares for 200 shillings. Although most of the shares that are going for that are called penny stocks, and they are not really wise now to invest in because the companies look shaky. Companies which are solid from 5,000 shillings to 10,000 shillings in a month, you can be able to invest, which should be pretty affordable for anyone in the Kenyan economy.
That is very correct. And nobody should have an excuse of not investing because I believe we can afford 200 bob every day. Now, if you can afford 200 every day, you can save every day through tools like Mshwari. If you are outside Kenya or in other countries, 200 bob is like $2. Yeah, it's $2 every day. So, and the last time I checked, Starbucks coffee is like $5. So that means you can afford $2 every day, and at the end of the month you can be able to use that money to start investing slowly. Remember, an investment plan is whereby you include it in your budget, so you do it every month. You are doing it. You are not this person who invests in January, the next time you invest is next year, February. That one will not work for you. You need to keep on doing it every month or continuously. Liz, you are saying good business tips there. Thank you so much. Jagoma Ray, what is your take on NSE insider trading?
So, okay, let me touch that on insider trading. What happened is that some people do illegal stuff. So they know a company is going to issue a good profit or it's going to issue a bad profit or a loss. So they have that information. They go to the market and they either sell the stocks or they buy stocks. if the company is going to do well, so hoping to profit. In America, they do what we call short selling. If a share is likely to go down, they borrow the shares and sell them, and then once they fall, they come back to the market. But now, legal insider trading is illegal, and insider trading comes in because people want to get some kickbacks. But if you are investing for the long term, you don't care about insider trading. You care about the value of the company you're investing in. So you see, you do not have a short-term horizon of a few days or a month so that you can quickly enter and exit. So when you're trying to chase, we call it chasing the weed. That's when you now get into these problems of insider trading or pyramid scheme. If you are investing in a smart way, the companies you invest in will not, you don't expect them to cease to exist in 3 months or a month. So really, you take a long-term view and you continuously invest in them. Companies that have insider trading normally tend not to do very well.
That is very correct. When it comes to investing, it's not like a microwave thing. Don't invest with the mindset of I'm going to make a kill tomorrow. So you start looking for insider information. Most of the time, we have seen those people who went for insider information. If you look for them 5 years down the line, they do not benefit from anything because they keep on hopping from one stock to the other. Remember, the deal is taking advantage of compound interest and time. In investing, time is the biggest asset you can get hold of. So insider trading is illegal, and it's something we wouldn't request any of you to focus on. um, I can see Bundu Bandit, you're saying, what are your thoughts on carbon credits for Kenya's future and derivatives?
So let me touch on carbon trading. Carbon trading is where companies are incentivizing other companies to invest in green energy so that we can reduce the amount of carbon dioxide we are expelling to the atmosphere. So what happened is that there's a market for trading on those carbon credits. So if you invest in solar or you in green energy, you can now, companies can invest in you so that they can continue to produce more carbon emission while you are helping reduce that carbon emission. So that is it. Now, when it comes to investing offshore, you need to be very careful because you see, you need to have an understanding of the offshore environment. You know, there are rules and regulations for investing in foreign countries. So you need to understand, and there are also limits. Like now, if you look at the shares that are traded in the New York Stock Exchange, they are very
Yeah,
expensive. Like Google,
yeah,
it's $1,000 plus. So you need to have a way of investing safely because there are also scams in international trading. So you need to
yes.
identify brokers, brokers that are reliable and they have a proven track record so that you can invest your money with. You know, in investment, one of the rules is that don't lose money. When you're going to invest money, don't lose it. Because if you lose money that you're investing, you become poorer. So first look at how secure is my transaction, and how we call them counterparties. The people you're giving your money to invest for you, how solid are they? So that you avoid counterparty risk. But we have platforms for international trading where you can open an account, and we also have companies that actually specialize in that. So you can even buy partial shares. You can buy shares for Google with $10 or $100. So international trading is also it's also an avenue that you can make money. But there's something else you need to know here. Emerging countries are better positioned to grow your wealth than mature countries, because emerging countries like Kenya have more room to grow because they are coming from a very low base. So if you invest 100 shillings in Kenya now, you are more likely to make it to 200 shillings than if you're investing in America, because the growth in America is already mature.
Is already mature. I guess his internet connection. Samuel, can you hear us? Oh my God. Samuel, can you hear us? Okay, let's hope that his internet will come back. As he was saying, it's very true. It's recommended that you'd rather invest in emerging markets than mature markets, because when you invest in emerging markets, chances are very high in 20 years, in 10 years time, you will be able to build wealth on it. But when you invest in mature markets like America, um, chances are high you will not be able to build on wealth. So when it comes to investing, especially for offshore markets, be very careful and choose on countries that are emerging. Choose on countries that are upcoming. Like, example is Kenya. We have I don't want to say other countries. Ethiopia, we have Rwanda. They are emerging countries. These are countries that we are forecasting after some period of time, you will be able to make money from it. But if you go for mature countries, it's very hard for you to make money from them, because these are countries that are already ripe. Unfortunately, I think our guest's network has failed. I hope that he will be able to join us again, because we were about to finish. Joanne, you're saying excellent tips on investing, especially in the stock market. Correct. These are tips you'll not get anywhere for free, and we were so humbled to get more information from software experts who knows the market more, because they use more technical formulas to forecast on the market. So what about Chebet saying, what about Bitcoins? What about Bitcoins? I really don't know what you wanted to say. What about Bitcoin? I believe maybe you wanted to ask if Bitcoin is a safe investment tool to take advantage of. When it comes to building wealth, if you're investing with the aim of building wealth, then Bitcoin is not something you need to consider, because as I said some days back, Bitcoin is yet to get the trust that is required for it to be a valuable currency or a valuable tool in the stock market. So Bitcoin is a bit shaky, and it's not something you would want to take to be a participant in it, because it doesn't really have the value that is required in order to be competitive when it comes to the stock market. John, you are saying, is forex trading a type of investing? To be honest, what I can tell you, I've never seen any wealthy person who is a trader. That is the thing. But it is not a type of investing. It is just like a type of a business you do, because you know, in forex trading, you are there trying to time the market to see which currency is going up, which is going down, then you time it and sell it. So it's, you know, when it comes to investing, you are taking advantage of time and compound interest. But for forex trading, you are like gambling, or you're betting on market up and down so that you can sell your currencies. Bundi, you are saying, are there any under the counter preferential shares that we should be looking at, either in Kenya or the continent? Where do you see things changing in our investment arena post COVID-19? So for your question, Bundu, what I would say is that when it comes to shares, I would say don't go for under the counter shares. This is because under the counter shares, the thing is, if things go haywire, or if things go against the way they were planned, chances are high you will lose on it. Just a second, our guest is back. Let me add him. Samuel, you're back, right?
Yes,
Right?
I'm back. I got a technical
Your
challenge.
connection is okay now.
Yes, now my connection is okay.
Okay. And we are actually
Sorry for
about
that
to end
interruption.
this session. Maybe I'll let you answer the three questions that came up. You give us your perspective, then we'll be able to like wind up. Chebet Geminate was asking, what is your view about bitcoins? And followed by Joan, who is asking, is forex trading a type of investing? Maybe you can answer those two as one of thing.
Okay, one of the thing about Bitcoin is just what we call a ledger. A ledger is a document or a book where you record things. So what happened is that Bitcoin, we have a very good way of, we call it a distributed ledger, of being able to update records in computing such that we can be able to follow exactly the last person and how the records evolved. So Bitcoin took advantage of that ledger and they made it to look like it's money. But it is not money, it's just records. There's nothing that is supporting Bitcoin apart from the records. That the records of who owns what and who is doing who is holding what asset. In this case, they're just virtual records of money. So when Bitcoin started, my opinion on it was there's no way records can be money. Money is something that is a value. It's a medium of exchange. So there's no way if someone can create money with a computer as record, that idea is just too good to be true. So even though Bitcoin looks like they can make you a lot of money, it's just speculation. Always know that you are risking, and it's like a gamble. So it's not really an investment.
That is very true, Samuel. As I just said when you are offline, Bitcoin does not have value because for a currency to be fully traded, it needs to have value and trust. So Bitcoin doesn't have those two aspects. So we cannot say it is something you can invest in. If you really want to get into Bitcoin, it's like you're gambling or betting on something you don't know, and that way you can't build wealth on it. Maybe you could take up on Joan's question: is forex trading a type of investing?
Now, forex trading is not investment; it's trading. You are trying to take
Yeah,
advantage of the exchange of money across the globe. So let's say like
correct.
the most traded currency is Euro USD. People who are
Yeah.
buying euros and they have dollars. So it's
Mm-hmm.
like an arbitrage. You're trying to take advantage of uh, whether the US economy is doing better than the European economy. Mostly people who do
Correct.
forex trading, they just do it on day-to-day basis. If you are taking a long-term view, you can against a currency, but it's still betting.
Yeah.
It's like you're trying to invest in the US market through its currency. It can go well
Yeah.
or it can go poorly. Most of the people through forex, they do it through speculation. That's what happened is that they give you a leverage of you are trading with $100, but now the leverage is to 50 or 100 times. So it's like you're buying $10,000 and try to take advantage of the pips. It's trading. You can make money or you can lose money. Most of the time you lose money. So
Yeah.
unless you're a very good trader and you have very good software for being able to predict how the stock market and how the currencies will evolve, I advise you not to take forex trading as an investment. It's not. It's just trading, and you're just
Correct.
betting. Only that if you are very good in betting and timing, you can make some money. Yeah. So
Yeah.
forex trading is really not an investment. It's just it's some form of gambling in a way.
Mm.
So it's a way you can have toss heads or tails, and sometimes you lose, sometimes. Most of the times, because there are people who are they are veterans in the trade in the industry who are very good in forex. They are the one who make most of the money, and the rest of the sheep just are led to the slaughter. So if you want to make money, a lot of money, don't gamble. Have a plan. Invest wisely. Trading is just like business. You can make money in trading or you can lose money.
Correct. I had actually mentioned that forex trading is like business. You can invest in business now and tomorrow everything goes haywire and you lose everything. So forex trading is a probability kind of thing, and it's the same as betting. So if you really are not into betting and gambling and all that probability thing, you'd rather not focus on it. But Bandit is asking, are there any under the counter preferential shares that we should be looking at, either in Kenya or the continent? And then where do you see things changing in our investment arena post-COVID?
So, of course, there are many shares that you can invest in right now. That's why now you need to have a person who is advising you, who do an analysis, a professional analysis, so that he can tell you that we are choosing these shares because we have analyzed them and we have seen they offer value for money. So obviously that information is given to clients who subscribe or who are paying clients because people have to pay bills. So don't be shy when your advisor tells you you need to pay a small amount of fees so that I can analyze for you, because it takes a lot of time and effort to be able to understand companies and be able to give a good opinion on how that investment is likely to turn out. So obviously there are shares that can be bought right now, and there are shares that should not be bought. And if they're in your portfolio, you should sell them because they're going to lose you money.
True. And if you want to be assisted with getting an
Any
analysis
other
of shares,
questions?
we do offer that. Just a second. If you want to be assisted with analysis of shares, we do offer such a service, and you can send us an inbox and we can be able to guide you at a fee. There's this question: where do you see things changing in our investment arena post-COVID?
So now what's going to happen is that the market discounts the future. The pandemic has come in and it has hit the country. So what the market is doing now is looking to the future, 3 months, 6 months, and or 1 year down the road. And the market will see how coronavirus is going to affect the economy and discount the market in that time. If you have noticed, the shares have stopped falling, so they are waiting for a way to see how the recovery is going to come in and how strong it is. Depending on how the stock investors see how strong the economy is, they are going to bid up the prices. Or if they see there's no recovery, they are going to dump stocks. So those are the things now we analyze. We look at what we call momentum indicators, relative strength index, to see how many people are buying shares, how many people are dumping shares, and how aggressive net sellers, how many guys are selling shares and how many guys are buying. So we look at those things, and then you can say, looking at this thing critically, we call them the technicals, we can see the market is going in this direction. So take your bet with this direction.
Correct.
So as you can see now, so the market is discounting that the globe is going to be over. The pandemic is going to be over in less than 3 months, and the economy is going to start to recover.
Yes, and actually the recovery of various economies will differ. There are economies that will recover really faster and others will not recover really quick. And unfortunately, Kenya might not recover that quickly if we continue with the current situation. The last question, I believe, is Jagoma. He's asking, any requirements for a dual citizen to invest in NSE, and what other stock exchanges in Africa are viable?
So there's no requirement. If you have any person can invest in the stock market if you have an ID or a foreign ID or even a company. Even companies can buy shares here in the stock market. Other stock markets in Africa that are viable, they are African stock market have been undergoing some sort of crash or bear market. South Africa economy has been going down. It's the largest stock market in Africa. Egyptian economy is ish. Nigerian stock market has been going down because of oil. So it's a mixed bag. Some companies are going to do well. What I advise my clients to do is don't look at investing in countries, look at investing in companies. Companies that are in countries and how their market is, how are they dominating the market, and what kind of products and services are they giving, and are they likely to give even better products? How are they innovative? So you bet with the companies. So once, if you see a company that is in Nigeria and it's betting and it's working aggressively to capture the market, and its revenues are growing, when a company's revenues are growing and its profitability is increasing, that means that the company is likely to give you better returns in the future.
That is correct. Actually, what I usually say, instead of investing from country to country, look for a company that is cutting across those countries that you're interested in. So you can look, maybe if you want to invest in East African countries, look for one company that is already operating in all those East African countries, then buy their share. That way it will be very easy. So for the interest of time, we would like to end this live session. We hope you have learned something tonight. And the last comment is Bundu. You are saying, thank you, really enjoyed this session. Please make Samuel a regular. He explains things so well for even us in the Bundus. I don't know what Bundus mean. Kudos for arranging and moderating this, Sheila and team. Thank you so much. Would like to take this opportunity to really thank you, Mr. Samuel Cairo, for joining us tonight and getting to pour your knowledge with us about investing and, of course, creating an investment plan. We hope we shall be able to host you once again in the near future. And we are actually planning to have an investment webinar, I think next week. I will DM you on that. Maybe you may want to participate in it. If you'd like to be part of this investment webinar, we shall be releasing the poster tomorrow, and this will be for paid. It will be paid for, so we will have people paying for it so that you can secure your slot and get to book your seat with us. So for everyone that was able to join us tonight, we really want to thank you and appreciate your time with us. If you joined us in the middle, you will get this live session on our YouTube channel tomorrow morning. Click the link that is attached on this live session so that you can subscribe to our YouTube channel, turn on notification, and get to enjoy videos like this and many others. Until then, thank you so much, Samuel. Maybe if you have any parting shots you'd like to say before we can end this session.
All I can say is that everybody has ideas on how to invest. The people who make it are the ones who do a plan, and they follow up on that plan by putting action into the plan. So be smart, do a plan, put action, and invest. And 5 years or 10 years down the road, you'll be happy about yourself.
Correct. Yeah, having a plan is very important. Just the same way we say you need to have a budget. Once you have a budget, you'll be able to have some money saved. Then have a plan so that you can invest the money correctly. So until then, thank you so much to all our viewers. We really appreciate your time, and we hope to see you again and again. Keep on liking our Facebook page, Financial Wellness Center, and of course, ensure you follow us on Instagram at Financial Wellness Center. Until then, stay safe and let's keep living financially healthy.
Thank you. God bless you all.